All right, let's get right into it. We're talking about a story that is just wild. It starts with what sounds like a crazy real estate deal for an Arctic island, and somehow it spirals into this massive transatlantic trade crisis that's shaking up the entire global economy. It all kicked off with a question that seriously sounds like it's straight out of a political comedy sketch. The idea? The United States wanting to buy Greenland. Yeah, you heard that right. But here's the thing. This wasn't a joke. The fallout was instant. We're talking about something that threatened to just tear up old alliances and completely rewrite the rules of global trade, like overnight. And the consequences? Ooh, they are very, very real. Okay, so let's back up a bit and see exactly how this whole thing got started. Because this wasn't just some random, off-the-cuff idea. No, this was a move that came from some really deep strategic thinking. So, why Greenland? Well, it's definitely not about just adding another star to the flag. I mean, look at this. Greenland is an absolutely critical asset for so many reasons. You've got the geography, right? It's the perfect spot for missile defense, and it sits right on top of these new Arctic shipping routes that are opening up. Then there's the money side. It's loaded with rare earth metals, oil, and natural gas. And maybe most importantly, it's a huge geopolitical chess piece, a buffer to keep Russian and Chinese influence in the Arctic in check. And this is what's just so wild about the whole thing, how fast it all happened. We went from talk to a massive economic threat in like a matter of days. So early January, the story is Greenland is a national security necessity. Fast forward to January 17th, and boom, it's an ultimatum backed up by the threat of tariffs. In the markets, they did not wait around to see what would happen. All right, let's talk about the immediate fallout, because this is where it starts to get even bigger. A threat like this, it doesn't just live on social media. Nah, it hits the real world, and it hits it fast. And here you go, the first shockwave. It slammed right into the financial markets. If there's one thing investors can't stand, it's uncertainty. And this created a tidal wave of it. You saw major European indexes just take a nosedive as traders scrambled to figure out what a trade war with our biggest ally would even look like. So how did Europe react? Well, leaders there were completely blindsided, but they were also totally unified. Their message was crystal clear. Hey, this isn't just a tiff with Denmark. We see this as a threat against all of Europe, and we are ready to respond together as one. But the pushback wasn't just coming from across the pond. Right here in the US, you had bipartisan criticism. Leaders from both sides of the aisle were basically saying, whoa, hold on. Using tariffs against our own NATO allies? That's just a bad move. It's counterproductive, and it pretty much just hands a win to our global adversaries. And then, of course, the industry groups started sounding the alarm, like immediately. They cut through all the political talk and put it in terms everyone understands. Lost jobs, higher costs for businesses, and a direct hit to manufacturing. All these sectors that really depend on that trade back and forth across the Atlantic. So think about it. If you're an investor and all of a sudden traditional alliances and the old rules of trade are just up in the air, what do? Where does the smart money go when it feels like the rule book is being shredded right in front of your eyes? Now, this is where it gets really, really interesting. We're seeing a fundamental shift in how people think about safe money. For decades, right, U.S. government bonds were the gold standard, the safest place to park your cash. But now, with all this political uncertainty, investors are starting to second-guess that. Instead, they're running towards hard assets, gold, silver, stuff you can actually hold in your hand, stuff that isn't dependent on a government's promise to pay you back. And the result of that shift? Well, you're looking at it. Gold and other hard assets have just shot up to record highs. This number, it's not just some random market blip. No, it's a direct result of all the instability we've been talking about. It's basically a vote of no confidence in the old financial system when geopolitics can get this unpredictable this fast. And this is a perfect example of that next level strategic thinking. It's not just about defense in general. It's about drilling down and finding the specific companies that are set to win in this new Arctic-focused world. We're talking about everyone from the company that would actually mine the rare earths in Greenland, all the way to the one that builds the high-tech radar systems to protect the area. But of course, this whole thing isn't just a game for Wall Street traders, right? This is a massive, real-world headache for any regular business that has to move its products across the Atlantic. I mean, just look at the sectors that would get hit by these tariffs. We're not talking about niche products here. This is the bedrock of the U.S. economy. Machinery, car parts, life-saving pharmaceuticals, even the stuff you buy every day. What does that mean? It means higher costs for American companies, and you guessed it, higher prices for all of us when we go to the store. So if you're running a business, what's the big takeaway? It's that you have to stop just reacting and start preparing. Like right now, experts are telling companies to do the math, figure out what these tariffs would actually cost them. They're saying double-check all your paperwork to avoid getting into trouble, and start searching for new suppliers now, not later, before these things potentially become reality. Okay, let's pull back for the big picture here. Let's zoom out one last time. Forget the immediate crisis for a second. What does this whole bizarre episode really tell us about the world we're living in today? Well, for one thing, Europe isn't just sitting back and taking it. They're dusting off some powerful new tools built for exactly this kind of situation. This one, the anti-coercion instrument, you can think of it as an economic shield. It basically gives the EU the power to fight back with its own targeted restrictions on trade and investment if they feel like someone is trying to bully them with economic threats. And this, right here, this may be the most important takeaway for anyone in business. For decades, customs and compliance, that was the boring stuff, right? The back office paperwork nobody wanted to do. Well, this crisis proves that those days are over. Understanding tariffs, sanctions, the whole supply chain game, that's now a C-suite issue. It's just as crucial to a company's survival as marketing or finance. Which leaves us with a pretty heavy question, doesn't it? In a world where a fight over a piece of land can spark a global tariff war overnight, is any supply chain really truly safe anymore? Honestly, there's no easy answer. And it's forcing everyone, from the biggest CEOs down to you and me, to completely rethink the global trade system that we've all taken for granted for so long.